Hello friends. So last time in my last video I have told you explained various items to be shown in the debit side of trading account, credit side of trading account, and similarly debit of the P&L or the credit of the P&L. At that time one more item was there to be shown in the credit side, that is the closing stock. Closing stock is the value of stock that is with the firm at the end of the accounting period. Now, certain things are to be kept in mind regarding closing stock. Closing stock, first thing, if two values of closing stock are given, two values, so always you will have to choose the least value. Lower value of closing stock is always shown in the credit side of trading account, and the reason behind this is that we always follow the rule of prudence. Prudence rule doesn't tell us to inflate the things. So I'll write the whether it is market price or the cost price, whichever is lower, that is to be shown. Number two, if closing stock is given in the trial balance, then it will not be shown in the credit side of trading account. It will only be shown in the balance sheet asset side. However, third thing, if instead of purchase, adjusted purchases are given, then in the trading account, neither opening stock nor closing stock both are ignored. Simply adjusted purchase will be shown because adjusted purchase is a value that has adjustment of opening and closing stock both. So three things should be kept in mind regarding the closing stock. Now some of the formula, if you read not to, they are not asking you to draw this profit and loss account and then after P&L and this etc. They can give you certain figures to find out what is gross profit, what is the amount of net profit. So these are few formula which is given here. Gross profit is always equal to sales minus cost of goods sold. Sales should be net sale and cost of goods sold. How to get the cost of goods sold? The formula is given: purchases plus direct expenses plus opening stock minus closing stock. Right? So purchases should again be net. Operating profit, net sales minus operating cost. Operating cost includes two: direct operating cost as well as indirect operating cost. Both the direct and indirect operating cost has to be reduced. Net profit, operating profit minus non-operating expenses plus non-operating incomes is the net profit. So these may be asked in one marker or all the three can be asked in 3 mark. To find out these with the given values, need not to prepare trading account or P&L account or balance sheet. Important terms: direct expenses I have told you, which are directly associated with the manufacturing. Operating profit is the earning before interest and tax. This is a term used in the corporate sector. So any profit which is before interest and tax means the value of profit out of which neither interest is deducted nor the tax is deducted is the value of earning before interest and tax. Balance sheet, I have told you what is. It is the statement showing the financial strength. It has two sides. Number one is the liability, second is the asset. Left is the liability, right hand the side. However, in case of companies, it is not in the horizontal form, it is in the vertical form. First we write the liabilities, second we write the assets. Now, what is shown in the balance sheet? Current assets, those assets which are to be converted into or can be liquidated within a period of 12 months, like such as cash, cash in hand, bill receivable, stock of raw materials, semi-finished goods. Then current liabilities, those liabilities which are to be paid off within a period of 1 year, means 12 months. Now assets are classified: fixed assets which remain with the business for a longer period. These are acquired not for the sale purpose. Intangible assets are those which cannot be seen or touched. They can simply be felt, like goodwill, patent, trademarks. Investment. Investment is, it's not the investment in the business, your own business. It is an investment somewhere in the profitable or marketable securities like shares, debentures, banks, fixed deposit, etc. For the purpose of these, we call investment. Long-term liabilities which are to be paid after expiry of a longer period, say for example 1 year, 3 year, 5 year, depending upon these time period, we just change the name of these liabilities. Capital is the amount which is invested by the owner. It is also shown in the liability side because this is internal liability, owner's equity, and apart from that, other liabilities are external liability. Drawing is the amount or any asset. It's not only amount. Any asset which is withdrawn by the proprietor for the family purpose. So do not always confuse drawing is the amount of cash. If goods are drawn, that is also drawing. If any of the asset of the business is partially used by the proprietor or his family, that is also drawing. Marshalling of asset. Marshalling means you are writing the assets or liabilities on a fixed basis in a chronological order in a given order. So two type of marshalling is there: marshalling on the basis of permanence and on the basis of liquidity. So arrangement of assets and liquidity in particular order is known as marshalling. In case of permanence, the most permanent, most fixed asset is written first, and then after gradually we just write less fixed and then again further less and then coming to the current assets. So this way we make a hierarchy of the assets, taking the maximum fixed assets, highly fixed assets at the top. Similarly, highly fixed liabilities are at the top, and then after gradually we reduce the permanence and we move to the liquid life. On the other hand, there is another way on the basis of liquidity. In that case, most liquid asset and most liquid liability is written first in the liability and asset side, and then gradually it goes to the permanent side. Grouping. Grouping and marshalling are a little different. In marshalling, we just write it in the chronological way, whereas in grouping, we group the assets. Non-current assets, intangible assets, tangible assets, current assets. So these are grouped. Similarly, liabilities are there: non-current liabilities, current liabilities, provisions, etc. So this way, this grouping is also done. So these are the certain theory parts, because I have not made any question here and I have not shown any example. But if you write all these things in the proper place, that will be there. So we close up this video here. Please do not forget to subscribe. And the next video, that probably will be the last video for this session. In that we will see how these this adjustments and the errors, omissions, etc. are to be incorporated, adjusted in the balance sheet and final accounts. Thank you.